Eric Muathe, Muathe.com, as a follow-up to a previous video from 2 weeks ago, where we saw this stock CIA and it was trying to break out. As you can see here, I was discussing the breakout and I was talking about the idea that since the stock did not have any type of demonstrated history of holding on to gains, chances are the stock would have done or was going to do the same thing. And so as a follow-through to the video, let's take a look at the current charts here and see what has happened just about 2 weeks after the video was recorded. Now if we take a look at the chart here, you can clearly see huge reversal here. In fact, it's been down since. Highs of 12, right now trading up around $10. It's reversed almost immediately as predicted. We can also see that now the weekly chart, for example, has this resistance line coming in play, showing rejection there on the weekly chart. In fact, if you take a look at the daily, you can see that what looked like a previous breakout on the monthly, as suspected based on previous history, chances of a reversal and failure were high. That's exactly what has happened, and you can avoid this type of obvious situation. Reason was, if you take a look at all data, this chart is so messy, and in fact we can see now confirmation the stock's pretty much been trading in this range between $12 and $5 since 2002. You're talking about 14 years plus of sideways action. In fact, you can even go back and include this period here since 95, so almost 20 years of nothing. And every time it tries to move higher, it's smacked right back down. As an example of this, every time it moves higher, you can see immediately there's a retracement lower. It's been doing this pretty much throughout its trading history. All moves are always met with this reversal, and right now we are seeing another example of developing reversal lower. It is best to avoid these types of charts for stocks that haven't never had any type of a sustained move, and this was a classic example, and we can see already it is responding. In fact, it is doing what it does best, which is just stay within that range, within the box. I don't know what's ever going to change a stock like this, but there's so many examples of stocks like this, so just avoid stocks that have never had a major run. And as discussed in the previous video, you can see great stocks have a tendency of moving higher, going sideways for a little bit, breaking out, going sideways, breaking out. In other words, they know how to hold on to gains and add on to those gains after some sideways period. Great move, sideways action. You can call this sideways action here. Breakout, holds on to gains, settles down, digests those gains, breaks out again. That's the quality. That's what you're looking for. Take a look at Apple here. Also had a major run here, 98 to 2000, settled down for a couple years, broke out again, held on to those gains, would break out again here, broke out again here. So you want to find stocks with a history of holding on to their gains, breaking out again after some sideways consolidation and digestion of those gains. But the last thing you want to do, in my humble estimation, is to expect that a stock that has done nothing for almost 20 years to suddenly triple, quadruple in the coming months. So you can avoid these types of frustrating situations by just looking at the history. If a stock has no track record, chances are it's just going to repeat what it's been doing. And here's a classic example of one that was not going to do much and is not doing much, unfortunately. Eric Muathe, Muathe.com. As always, good luck, peace, and blessings. Woo! You gotta test, you gotta test, you gotta test.